What's up, everybody? Today is Friday, no, September 8th. And for some reason, I thought we were in November already. Time flies when you're trading, I guess. This week is week number 5, or the starting of week number 5. Last week we gave Easy some homework to trade his grade A setup, but also trade B grade setups, and then we're gonna jump into a couple of recaps of his A and B grade setup, and we'll jump into anything he's learned from the book, The Hour Between the Dog and the Wolf. So he's gonna give us an update as how things are going in his trading. Um, Hopefully he's made good progress. I've noticed a difference already in his entries, so we're seeing improvement. Let's hear from the man himself. Easy, how's it going with your setups?
Hi there, everyone. Easy here. Actually, I'm doing great, I gotta say. The past few weeks, I've been looking at the chart. The more I look at it, the more I see my setup there. And of course, you're learning every day, right? So every day I'm getting something new. I'm adding it to my book, and then I discuss it with Semper. He's telling me what to do and what not to do on it. So lately, I've been reading the book, The Hour Between the Dog and the Wolf. And on this one, around chapter 7, something that I've learned is the cortisol level that's in your body. So the cortisol level, what happened is, let's say you need to react to a certain situation, then the cortisol level will increase. So that's like how you react to stress. The best way to explain that one, like they did make a reference in the book. Let's say right now, if I can give you an example of what's going on with the cortisol level, people right now, there's the war between Ukraine and Russia. In Ukraine, people are getting bombarded every day because they know that there's a war. But in Russia, they're getting bombarded randomly. And just because it's randomly that they're getting bombarded, they are much more stressed than the people in Ukraine because they don't know what to expect. They don't know when an attack is coming. So their cortisol level would therefore increase, which would damage their system. So we can relate that to trading. In trading, this is why it's important to trade your setup, because after seeing your setup 10 times, 100 times, 1,000 times, you won't be stressed whenever it shows up on the screen. When it shows up, you know what to do. You know you have to press that buy button or that sell button, whatever it needs to do. So therefore, you'll be less stressed, and then your body knows how to react to it. Um, on this case, they also talked about the vagus nerve. The vagus nerve is something that will I'll say counter effect that stress level. So whenever it happens, if that vagus nerve is activated, then in that case, you won't have any headache, you won't be anyway sweating, or you won't be not trembling, but when you're shaking or like
Yep.
just right before of a trade, your heart rate goes up. Then in that case, you'll be more prepared if it's a trade that you usually take. So that's the importance of taking the same trade every day. I wouldn't say every hour or every time frame, but that's
Mhm.
one of the thing that I've learned so far.
That's cool because the book explains the vagus nerve as the second brain of the body. It's something like that. And it's crazy because it's kind of walking you through on how to build that gut algo even indirectly. It's not telling you, do this, do that, so you can so you can create a good gut algo. But if you kind of take it into a trading sense, you're like, okay, he's saying you only want to trade patterns that are your setup or that are good setups, whether you have your own setup that you use or you're using somebody else's setup. Even somebody else might look at that same setup a different way because they have a different gut algo. And he says not all gut algos are developed the same. And that's where we're trying to get Easy to only trade his grade A setup. His B grade setup when he's already traded his A at least once. So like that, you already have the confidence and the consistency of trading that grade A setup, that when you do take a B grade, you're not gonna be nervous as fuck. And you notice that when you get in a trade, if you're nervous, that
Yeah,
means that that pattern is not your setup.
that's correct.
But if you always trade that setup and you build your gut algo, when you get in that trade, you're just gonna be like I always tell Lasagna Cat, cool, calm, and collected. You can enter the trade, hit buy, and most of the time it might not even come near your stop. But in a B grade setup, it might come near your stop or at your stop, and you can still like be cool, calm, and collected even at that point. So keep trading your prime, your grade A setup so you can keep building. Not only are you building your gut algo, you're telling your brain to only trade that setup, and you're training your eyes to find that setup. So the next level for you, easy, is to see what patterns form, like price action patterns
Mhm.
form before your setup. So like that, you're gonna be able to anticipate your setup. You know what I'm saying? And even at that point, your cortisol levels or your testosterone might go up because you're getting excited that your setup, your grade A setup is about to set up.
That's an easy one for me to relate to because my grade A setup always begins with a dump. So like when I see a dump happen, I know that I'm going to start be looking for my setup to form, and I have noticed that my excitement gets jacked up at that point. That's when it begins. So I remind myself that it's my grade A setup for a reason. It's because I'm familiar with, and that I can identify it and get in. And it's a known quantity, whether if I win or if I lose, I'm prepared for it because I've got my risk reward and I've identified my setup.
Yep. That's a good point, Lasagna Cat, because you want to be able to trade or be in your trade and not be even like a couple of weeks ago, you guys asked me like, well, how do you anticipate? And I I explained it as if like my body's getting hyped up, to for my setup. And it's like I didn't know how to put it into words. But now that 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 book kind of explained it in a different angle where it shows, okay, your cortisol levels are getting higher or your testosterone's going higher and you're getting excited because your setup is about to set up, and you need to calm those nerves as well, because even like right now, earlier today, there was I was in a play and some random news came out and I got stopped out,
Yeah.
and you just got to let it go. I'm still green. I'm still not sour about it. I was on at work on a call, and that candle that call cost me $2,000. But hey, I'm still green, still keep the streak going. Everything's cool and we're good. But
Yeah.
if you feel your body getting hyped up, you got to be like, okay, deep breaths, go do a push up or something to kind of balance out your hormone levels, is what he calls them. Um, and you can think clearly or think clearly and see clearly, so you can see the chart in a unbiased kind of way. Because if you start to get hyped up and you don't calm those nerves, guess what? Guess what that's gonna cause you to tunnel vision.
Mhm.
And when you tunnel vision, that just goes all bad because you're locked in on this chart and you're like, fuck, I'm not seeing the bigger picture. And you want to be calm and be able to see the big picture, because you might get in a trade you shouldn't be getting into.
And if you're in a trade that you shouldn't be getting into, and I've noticed this with myself for a long time. Like if you're not trading one of your setups, you're dealing with the unknown, and there's a big part of you that absolutely knows that. But you're emotional, so you're still like doing it anyway. I'm speaking from my experience here, and it's like when you don't know what you're dealing with, the unknown, you are a lot more likely to view market information as threatening, and you'll become less and less able to make any sound decisions. It sort of spirals from there. And you need to be in that familiar state so you can look at it objectively, and the risk reward is something that you've knowingly signed up for. So it's like, in that sense, the worst case scenario is, well, okay, I agreed on this amount of risk, so I can handle it. It's that cup of coffee thing, you know.
Yep. Yep. Connor put it best when he explained that cup of coffee. If you're able to lose, $5 and not even care about it, then that's your level, and you'll slowly make it bigger. So like if you can start out with the max stop loss of $10, but your profit is $20. I seen a video where you can be 50% right and still have a profitable trade if your risk management is laser. So you always want to, you guys always hear the 2-to-1 ratio, right?
Yep.
They
Yep.
use that for a fact. They use that for a reason. They want, because if we show a chart and you lock it, let's say you take 10 trades and you stop out your first 5 trades are red, but you stopped out at $10 every time. So that's minus $50, right? But then the next 5 trades are green. The next week you got 5 trades that are green. And you locked in at $20 because it's 2-to-1. You locked in at $20. Guess what? You're still going to be green, even though you're 50% right, because your profits outweighed your losses. So it's, you had $100 in green one week and versus $50 the last week, you're still up 50 green. You're still up $50 green. And that's just the name of the game. If you learn that like immediately out the gate, you'll be that much more ahead, because instead of, if you're going 1-for-1 ratio, of course you're gonna have a losing trades and a losing account, possibly even blow up your account. That's why trading psychology, risk management, and screen time are probably like the 3 biggest things you guys should be focusing if you're brand new to trading. And you have to have a setup, whatever that setup is. You have to have a setup and only trade that setup for a certain amount of time. That amount of time, I have no idea what it does, but I've noticed with Easy and Lasagna Cat last season that around week 5, after week 4, their confidence was going up. They can call the play. Their entries were laser or a little bit better than what they were when they first started.
I can't tell you how much my entries have improved. Actually, I can. My entries used to suck, and now they're really good.
Yeah. Yeah, it's like
That
at
says it all.
first, I find that in the beginning, when I entered a trade, even though like I had an idea where it's going, when I entered a trade, I was hoping that it goes in my direction. Versus now, when I enter the trade, I know it's gonna go in my direction. Or so far, 80% of the time, it does go in the direction that I was thinking. So that's what I found based on the entries that I'm taking.
Nice. And look at, and you said 80% of the time it goes in your direction. That's way better than 50-50.
Correct.
So that means you'll be up like $300 to minus 50. You know what I'm saying?
Mm-hmm.
Instead of getting in on at the wrong time where you're like, fuck, it hit my stop. But now where you're getting in, it's like, damn, it never really comes near my stop. if you have your grade A setup. Your B grade setup, it might come near your stop, but the biggest thing that's helped me do that is a hard open close below that level. And that comes with the grain of salt because you might get smoked. The hard open close might be 10 points down or 5 points down. That's where you got to have the finger on the trigger ready to cut it.
You see right now something you just said, the hard open close under that level. It goes with the fact that sometimes you'd be saying something and I think I understand until I see it visually. Then that's when I realized I didn't understand what you were saying. Just like when we were talking about that move, that lower high off the 10 SMA. Right now, I'm not sure what that means, that open close.
So
So-
let's say you have a level like let me see.
So on this one, that's why I think I'm more of a visual person. I need to see at the same time that you're saying it.
Sure. Hold on a second. Let me try to find these freaking drawing tools.
Well, yeah, you can draw my
So
chart.
so right here. We'll take this for example. See this bar right here
Yeah,
and this one.
yeah.
Let's just say this line right here was your stop loss. And sometimes what it'll do, it'll hit your stop loss or pass your stop loss and then get sucked right back up, creating this type of candle,
Or a fake out kind
like
of
this, like
whatever.
that, right?
Mhm. Yeah.
So you're like, fuck, and then it squeezes just like it always does. What the fuck? And you're like, man, if you were to just open up a hard open close, this is a hard close below that level,
Mm-hmm.
and then it open right here, right?
Okay. Yeah.
So let's say your stop is right there, then you're gonna try to get out right there because it closed below that level, it opened below that level. So you would have stopped out right there. If, because this one, honestly, it could have went up right here. And then, kept going up. This could have happened right here.
Mm-hmm.
But you don't know that. But that's a hard that's a hard close. And this is a hard open. See how it open below your trade?
Yeah. Below that
And
level.
that's what I'm saying. Take it with the grain of salt because
Mhm.
you might be way down here and you're stopped out. So you'll get used to it. Is all I can say is you'll get used to
Okay.
the hard open close.
So
Right now
so
you
that
can
hard open close is a level, but then the candle need to close below it
yeah.
and at the same time open below
Yeah,
it. That's what
yeah.
it means hard open
That's
close.
that's where you're like, oh shit, this is gonna go against me right here. You're like, oh fuck, this is
Got
gonna
it.
go down. Can I? You gotta ask yourself, can I hold? First off, right? Because it could be right
Mhm.
there, and you can tell yourself, well, it might catch this moving average or this VWAP, whatever it is, right? It can.
Yeah.
That's the next support level is this line, and sometimes it'll do that where it loops it.
Okay, got it.
So that's just you'll get experience and you'll start to open that. But I've seen the difference where I'm trading with another member. He gets wicked out. I'm waiting for a hard open close and it comes back and it goes in our direction.
Mhm.
And he's like, fuck, I just got wicked out. That's where the hard open close skill
Okay.
comes into play. But hopefully that answers your question.
Yeah, on this one, I think it's good. I
And
get it.
that goes with any level, it could be this level. Oh shit, we're going short right here, and it closes up and it opens up right there. So that's like a hard open close. When
Yeah.
I started using that is after I got used to stop losses, and then I'm like, okay, what I would do honestly, what I recommend you do is on your first trade, stop out at your level, whatever it is.
Mhm.
Right? On your second trade, if you have a cushion, then you can kind of have that wiggle room. And then you'll start to get used to like, oh, hard open close. Okay. That's what it is. That's how I should play it. And you'll have your own way of playing that. Maybe you can stop out at the close, you know, like if it closes below it, okay, let me see if it pops up so I can at least close at my stop. I
Mhm.
don't, that's kind of iffy play because, you know, you're stopping out up here, but you don't know if it's going to keep going up with the next candle. That's what I'm saying. Take it with a grain of salt and learn your own setup. And maybe don't use a hard open close on your first or second trade. Maybe use it on your third trade just so you can get used to it. Yeah.
Okay. Perfect. All right. That's good. Okay, for my trades, I don't have much trade this week, but I do have a few. Since it was a short week, Monday was a holiday.
Yep.
Wait, where is my trade? So on the 5th, the first trade, just gonna open just to to see what happened there. Okay, yeah, oh yeah, I remember. Remember on Monday that sorry, not Monday, but Tuesday. That's that day that we had, like, it was going up, coming down, going up, coming down.
Mm-hmm.
So it was a bit confusing. I remember I was talking to you. I took my first two trades, and then my first two trades were a loss. That's what I remember. Yeah. Let me just confirm that. So as usual, we have the cross. The cross is already there. So we have red over green. So my 50 is over my 10. And I think I entered here. I entered here because I was expecting that 50 RSI to be resistance, but then it just kept pushing up all of a sudden. So I closed it right away. It wasn't a big loss. Like my first two trades, there were like two small loss. But maybe you can tell me exactly why. I don't know what happened there, or a reason maybe I shouldn't have entered in that trade.
There's two things on this chart that look bullish to me. Actually, three. Um, the number one thing that I always look at, what is that?
MACD.
No, I actually look at RSI. Can you tell me what's going on with RSI?
RSI.
Right,
SI.
right before your play, tell me what's going on with your RSI.
It's making, well, it's going up. It's going higher, or
Yeah,
it's making higher low.
yep. There's
Okay.
divergence. Look at it's flat right here. It's
Mm-hmm.
diverting. It's diverting right here. It's gaining strength. Just go up. Not only
Okay.
that, you have green volume beats in the consolidation zone. The consolidation zone would be like this, right? Or you can do like this whole thing, right? So if you go down, that'll be that red bar. These are things that should be catching your eye, right? Check this out.
Yeah.
Look at this big red bar. Let me change this color. I need a this big red bar right here. Right there. If you go down, look at the volume.
Okay.
You go down, you see that big red bar, and you don't see no like a big red bar like this. You're like, what the fuck? What's going on? Well, right there, sellers are taking profit, causing this pop. But look, when they were taking profit, more buyers came in with this green candle. That was a buyer
Mm-hmm.
beat. That was a buyer beat. That should have been your first signal. Like, okay, it might be basing because it's hitting this level. I don't know if it's a significant level, but that level is basing. And then there's no red volume beats right here. Nothing, not even close. And then look at how many green bars per red bar. So you got 3-1, 4-1, 3-1,
Okay.
or 4-1. That should tell you buyers are coming in
Okay. So this is what
because
photo buying.
yeah, buyers coming in. You don't have your TTM, but the MACD says sellers are getting out of the way with the oscillation. Look at this oscillation. It goes
I
high
I
and it
I,
gets
I still don't
lower
look at that oscillation
and then
thingy.
it
I'm
goes
not.
up. I don't really look at it much, but if you don't have your TTM up,
Mhm.
that's what you should use. So you got one bullish, you got the MACD cross right there, another bullish.
Okay.
Usually I'm getting in at that point. When it's diverting and I get
Mhm.
the MACD cross, like I told Whiplash, like I like to see the MACD cross is this cross, not this cross right here.
Yeah, yeah.
This this cross is strong, right? If it crosses up above the zero line right here, that's the one Brandon talks about. Like, yeah, got the cross, it's bullish. The cross I'm talking about is the average versus I don't even know what those lines are, but I use that the same way I use the RSI. So the RSI is creating higher lows, and then we get the cross like right here. We get the cross. And you will always get the cross on RSI before you get it on MACD. So you get the cross right here, comes back, crosses again right there. You're getting higher lows. You got buyer volume coming in. You got the MACD cross. You got the seller oscillation going away, going into buyers. You should have been entering here
Okay.
to go long to the 50 SMA.
And also another reason why I went short was I see the 666 there. Like, I
Right
mean,
here,
there were so many moving averages on top of it. Like, I thought this would be like a good resistance.
it can be, and that's why you got to kind of wait for how it develops. Your next best entry could have been up here because you got the 50-10 cross. You're above the
Yeah.
666. So this is one leg, second leg.
Well, okay. You that leg. Wow. Okay.
This
Because
is a
usually
leg.
to me,
This
a leg should be going up and then coming down, but like it's almost looking flat to me right here.
it is, but
Like,
look, it's creating a higher low, so it is a leg.
okay.
So it went like this. This is your first leg. So you could have got in any of these candles right here. Anything
Okay.
above these three dojis with the stop somewhere right there. That could have that's your B grade setup, remember? Because that's your first leg and it's above the 10
Mhm.
and the 10 is not above the 50.
Yeah, it didn't cross yet. Yeah.
Yeah. Your A plus setup is right here. You got the 1050 cross and then it comes back down, tags a 50. You could have got in right there. Not much, but you could have got stopped out.
Yeah.
This is not your grade A setup, but you shouldn't have been entering here. Short.
Okay. All right. Okay.
But just pay
So
attention to divergence. Divergence will tell you a lot. Especially
that
if
was
you got
right
it,
prior to the divergence.
yep, right prior. But not only that, this big green volume or
Mm-hmm.
price action, that should have told you like because the way that I see it is way up here is resistance. Never came close. So the next point, this is resistance, this is a speed bump. And it hit the speed bump.
Okay.
And then
Well,
I don't know if it went up to this top level, but it probably pretty certain it probably did. I don't know.
mm,
But yeah, look at price action. Look at the green volume. The green this big green bar said strength. Because there's no wick. Almost a little baby wick on the top. If it was like a longer wick, then I would have been like, okay, maybe think about getting in.
okay. Perfect. Okay. Well,
Just pay
okay.
attention
So I
to
pay attention to
RSI,
that. Yeah, divergence.
divergence, volume, and MACD.
Let me just write that on my note real here.
Because it is your setup. It's your grade A setup, right? Because you got the 1050 cross. But your grade A setup should say to hit the 50 first, right? So you wanted this leg to hit the 50,
Mhm.
and then you would have got in somewhere right here, and then you stopped out right there.
Yeah.
So you never
Yeah.
got that. So you broke that rule,
But
right?
it is already short. I mean, the fact that I have my 50 over the 10, it is a short setup for me.
It is, but you never got your confirmation of the 50 like you like to get.
Oh, okay.
If you would have got the confirmation of the 50, you wouldn't have got in right here because you probably would have been scared. You're like, fuck this. This is a green candle. I'm not getting in.
Yeah.
But if it would have been like, let's just say this 50 was right here like this, then that would have been better
Okay.
because you want to get that confirmation. Trust me, I've traded your setup and it's worked out for me.
Yeah.
But
that's
but
good.
but when it tags a 50
Okay.
and it comes back down, you want it to tag the 50, create a lower high. That's
Okay.
why I say lower high off the 50 for a short or lower high off the 10 for a potential short.
Off. Yeah. That was prior to the day that I understood really what the off the 50 means.
Yeah.
For off the, yeah, I
Because
remember.
your B grade setup, there's two trades right here. Right here.
Yeah.
Lower high off the 10 SMA.
See
Right it
it.
short. You could have rode it short to the 50. Right? Here's another one. Lower high off the 10 SMA again. You could have rode it here down to this. I don't know what you have done there.
I have 666 and 100.
But if you got in right here, you should have wrote it down to the overcool. Or whatever what's the blue line? 100
The
EMA.
blue line is 100. Yeah.
Yeah. Once it breaks a 50, remember it's stair steps. It broke the 10, right? Broke the 10 right here. So where is it going? To the 50, right? It broke the 50.
Yeah.
Where's it going?
To the 100.
Exactly. But you want to see a pullback because the reason why you want to see a pullback is because it's going to gain strength. It seems kind of, remember, you have to think inverse of what regular people think. You're like, why do I want to see a pullback after the 50? Well, because it needs to gain strength. It needs to get strength. But what tells you that it's gaining strength? The RSI. Remember, it's called relative strength index.
Yeah.
So the RSI is telling you it's got strength to go to the next moving average. So it is bearish this whole time right here.
Yeah.
And another reason why this would have been a better setup long is because it held the 50 SMA. I mean, you would have been in the trade for a while.
Yeah.
But like I said, look at these little dojis and mark off levels. Those could be your targets too.
Yeah. I'm going to pay more attention to that one.
Yeah. Even like this little doji right here. This little doji marked that level off. What the fuck? Where can I get in? Okay. It was resistance here and it smashed through resistance. Once it smashes through, what's it do? What you want it to do is come back, pull back, test it, and go up.
Okay. That doji. Okay. Perfect.
Yeah, these
And-
little T dojis, any kind of these dojis like that one, this one up here. There's a couple. Especially when they line up, like let's say this doji lined up with another doji, like this doji right here, they line up together. That's like super strong right there. Look at what happens when it breaks it right here. That's why I like to get my pivot points. I call them pivot points. I don't know if that's what they're really called, but look at boom. If it gets over there, it's fucking going up. Excuse my French, but yeah.
Okay. Perfect.
Hopefully that helps you clarify this trade. And then what happened over here?
Yeah,
What
I mean,
happened over here?
yeah, well, that was my second trade of the day. Again, on this
Short?
one, I was like,
Or
no,
long?
that was a long. I went long because I have my 50s over my 10s over my 50s. Sorry.
Yep.
So yeah,
That's cool.
yeah, I went long when it tagged, and then I went long, but then it didn't play out. Like that was really a crappy day that day.
And I think that's why you were revenge trading. I was like, no, stop. Just call it a day. Don't even trade no more. I was telling you, like, that's one of my rules is 2 red trades back to back. I'm done. Like, clear my
Yeah.
head, go for a walk, maybe come back for power hour. I think you did come back for power hour.
Yeah, I did actually. I have the power hour trade. That one was the
But you
green trade.
corrected it, right? You cleared your mind, you fucking let it
Correct.
go. You let
Yeah.
this mess
Well,
go.
yeah, actually, I just worked all day because I was like, you know what? Let me close my chart. Let me work. I have some work to get done. So
And
yeah,
that's
during
awesome.
power hour, I came back.
That's what I was telling you, like, no more trading, but if you want, come back power hour, because especially during like 8:30 my time to 10:30 AM, it's like
Mhm.
real fucking slow. There's really nothing that happens. Maybe
Yeah.
sometimes here and there, but it really starts to slow down past 9 AM my time. And it's like, fuck, I should just not trade and just wait. That's why I trade 2 times during open between 6:30 and 8:30, or I try to, and then wait for power hour. And then, I usually trade one after market. That's where my day starts at 3 p.m. my time when market opens, when ES
Yeah.
opens. That's my day.
Yeah.
It's not like Monday, Tuesday, Wednesday. It's future days, which starts at 3 p.m. my time.
You have a question in the chat from Shiko, who wants to know something about the RSI. How do you know when the RSI is gaining strength
Um,
at
how
pullback
did I
50 to
telling you?
100 question mark?
It's creating lower highs, even though like the way that I love to see it is this is the best. This doesn't really show. Let me see. Um, trying to see if there's any good example. But what I like to see is, okay, break that level, come back and retest. Can you move this the legend to the other side? Easy?
Oh, sure.
No, you're good. You're good. Yeah, move it to the right side. Yeah. Okay. So kind of like right here. So it breaks a 10, right? It breaks a 10. So then it comes in from the over hot right here on the top. It's right here. Comes back from the over hot. What do I want to see? I want to see a break of the 10 SMA and then a break of the normal range 70. I want to see a break and I want to see it tag the 70. That's gaining strength to the downside and then go down, right? So it hits the 10 SMA, confirmation right there, confirmation right here, and then go down. This would have told me that it went down to the 50 SMA, right? So now, how do I know it's going to go down to the 100? So I want to see the same thing that I saw over here. And sometimes it might not be per pitch or perfect where it tags that level like it, like you want it to, like that, and come down. Sometimes you'll get this where it shies it. Picture perfect would be hit this SMA, hit the 50 SMA right here. I would have liked to see that hit the 50 SMA. And then you know that created a lower high still. And then you know that it could have possibility to go all the way down to the overcool. But I like to take price action in steps. And sometimes you'll get one fat candle that'll just smash through all the moving averages. But okay, so the next step, you got the 10, you got the 50. So the next step is the 100, and you see it pull back and create a lower high. And you see the volume. Look at the volume. The red is coming in, gaining strength, gaining strength. MACD is gaining strength. The bars are getting bigger. If you had
That
TTM,
oscillation.
if you had TTM, it'd probably show the same thing. And then the last thing that'll tell you that is gaining strength is the MACD spreading apart. If you see this and then you see like MACD coming over here, you're like, oh fuck, it might create another pullback and then up. And then like right here, it might go up, cross up. Cool, bud. But hopefully that answers your
Perfect.
question. But that's what you like to see, and you just you'll get used to it. But you like to take the steps. So you get the 100. If it smashes through the 100, okay, right here, good example. It smashes through the 100. But look, where is RSI? It's almost at it hit overcool. So it doesn't have much more leg room down. That should have been your first. That
Okay.
should have been your
All right.
first signal. Easy. It's like, okay,
Yeah,
it has no
yeah.
room down. Like there's like right there. It has no room to continue. I mean, it could. Obviously, it can
Okay.
go to overcool, but 5 minute has still headroom down. And this is where you're checking the 1 minute RSI, you're checking the 5 minute RSI to see if the 5 minute RSI has strength or still has room to go down, because this pop on the 5 minute could have been a lower high off the 50
Okay.
or off the 100, whatever, right? It could have been a lower high, and then you're like, okay, the 5 minute is over hot or overcooled. So is the 1 minute. So there's like no room down in
Yeah.
the what's that?
That's I mean that's not something I've thought of before. Like, does it still have room to go down? Like, that was a good point you made there when it hit that 100, and then at the same time it's on the undercool or whatever,
Yeah,
overcool.
overcool right
So
here.
yeah, does it have room to go down? No, then in
Mhm.
that case it most probably will bounce from there. If
Yeah.
not, I don't know. If not, it might consolidate
Well, not
before
only
keep
that,
going down.
but Brandon is always saying, like, if it was like over here, he'll say like, oh, it hit the overcool, but the 1 minute can reset, right? Because it
Yeah.
can pop back up and then it can go way down and then come back. Sometimes that does happen, but normally it doesn't.
Okay.
And then you just start to see the higher lows. You see the base. You're like, okay, higher lows, hit the 50 right there. So you want to see it hit the 50 right here. Okay, no, that's a 666, huh?
Yeah.
So that's a 666 and it hits it right there. So what are you thinking now? You're like, okay, it hit the 666. The next step is to smash through the 666, because the 10 is right here, the 100 is right there.
Yeah.
They're so close. So price action it makes it easier to smash through that level. The closer price action is to that moving average, the easier it is to bust through that level. So right here, it busted through. So you know it has strength, right?
Yeah.
Okay, and it just got closer. The moving average is pointing up. So the next logical point is to smash through that level. So then you're looking, okay, where's there dojis? Is there any dojis in this level? Okay, there's one right here. There's one right there. Let me just create a zone. If it smashes through that zone, right? Oops. Dang, my freaking mouse skills are way off. But smashes through that zone, right? Smashes through that zone. What do you want to do when it smashes through the zone? Come back and confirm. You come
Come back
back,
and retest.
retest, confirm, whatever.
Yeah.
So retest, you got your 10-10 or 10-50 cross. It confirm your zone right there. You could have got in on any of these candles. If you use the technical, I mean, you could have got in a little starter right here at the cross. You could have got in. The 10 SMA is still pointing up. You could have added more on this one and just wrote it up. But yeah,
Right. So that was on the 5th Tuesday. And that, like I said, these were my first 2 trades, and then it's like red, and then I took one more trade during power hour. Which one? This one. Yeah, and this was the trade that this was the trade that got me green, I'll say, whatever, on that day. Oh no, actually no, I finished the day red, but it was like a small red. So I was able to recoup some of my loss on that day. Wait, let's see. That was that trade. Okay, you see that trade? It's around what, 3:30, right before the close. So yeah, this is the close right here. So it's a trade that I took before the close, and then that was one of the things that we spoke about last week, where I keep getting wick, like I keep getting stopped out, but I know the chart was bearish. So it's right here. Yeah, right here. It's on this candle that I took it. So this is where I did my entry right there. And then I wrote it down. I think I sold here, but then it kept on going. But at least I catch the majority of the move.
yeah, that
Yeah.
to catch the majority of the move, especially when moving average is that far apart, I would have
Mhm.
put a trail stop on the 10 with like 2 ticks above it or 4 ticks. I'm using 4 ticks above it,
Okay.
above the 10 SMA, and look, you would have caught it all the way to right here on your last contract.
Sheesh. But that's after hour though.
It don't matter, dude. Futures is open until
Right?
15 minutes before 2 o'clock my time. So at 1:45, if you don't have enough money in your account to do the maintenance, which is not the $50 margin on MES, but the 1100 margin
Mhm.
on ES, if you don't have that in your account, you're gonna get margin called. They're gonna close your position.
Position. Yeah.
And I know firsthand. I'm thinking, oh, we got all the way till 2.
Yeah.
No, you don't. You got until 1:45.
Do they
Yeah,
take all
I
your
heard
money,
of
or do
that.
they just close your position?
They'll close your position and you'll be red or whatever your position's at,
Oh, wherever you're at.
Even
All
if you were green?
even if you're green.
right.
Wow, okay.
Even if you're green. This is, I don't know if that's the same for Apex or
It's
or
worse. It's worse. They actually close your account completely because that's a major violation.
oh shit.
Oh, yeah.
Man, harsh.
So
Yeah,
so what,
so
after hour they close your account if you have an open position?
If you have
no,
after 5 o'clock,
After
Eastern
5.
time, yeah, after 5 o'clock. You
Okay,
still
okay,
can
okay,
trade
okay.
between 4 and 5, but you have to 4:59, they say. If you have
Yeah.
any position, they will close your account completely.
Huh. What about trading on Sunday?
You can trade from 6 o'clock, no problem. It's just 5 to 6. You're not supposed to be trading between 5 and 6 or holding any
Okay.
position. Yeah, positions. Sorry. Yeah.
That's good to know.
Oh, yeah.
That's good to know.
yeah. Yeah,
Close your
definitely.
account.
Like if you have just Ninja Trader, you have until 1:45 to close your trade. At 1:45, exactly at 1:45, they will close your trade, even if you're green. And they will margin call you. Even though you're green, they'll margin call you because you don't have the margin, you don't have the cash to hold with, overnight. Even though overnight is between my time 3 to 4, no, 2 to 3, my time, they'll margin call you. So even though you made green, hopefully you made more than 25 or $50. Your first margin call, free. Second margin call, $25. Third margin call, and everything after is $50.
Okay.
Oh, let's go back to your trade. Let's recap your trade. I didn't really. I know it was green, but
Wait, I have to open it back up. September 5th, one short win. Yeah, this one.
So
On this one, can I say? I know I entered too early on that trade. That one. Based on the rule that we have placed, I'm supposed to enter on the
Well,
direction, on the candle of the direction of the
a
moon that I
better
want.
entry would have been over here.
That's right.
Either of those two candles.
Yeah.
And I think you're getting like a little bit impatient. You're like, fuck, it's gonna go down right here. And you're like, just let it play out. Let the whole thing play out. But it's
Yeah.
hard. And that's something that you'll get used to. Once you keep
Yeah.
seeing this over and over and over again, you're gonna be like, Temper wouldn't enter on this way. Short, you enter on the downside, not on the upside.
Yeah.
And this
Correct.
trade you could easily remember. You want to wait for the next candle. Like that could have been your pullback low, right? Or your pullback
Mhm.
high.
Yeah.
But this green candle, you would have told me like, stay out of it. This candle, like, if this candle, if these two were inverse of each other,
Hmm.
the play would have been awesome because you got in even earlier. But like I say, you never know if it's gonna continue going up or if it's gonna go your way.
That's
'Cause
correct. That's
you didn't finish seeing the rollover. This roll. Like I said, this candle, I'm glad that you got in that candle, but if you would have just waited 5 minutes, you would have had a primo entry.
yeah.
That's not your setup though, right?
Yes, it is.
Well,
It's
he's
my
got
setup
this
on the
10-50,
5 minute.
yeah, 1050 cross. He's got, and then he's got a lower high, not off the 50, but on the 50. Oh no, his 50 is way down here.
My
But that
50, yeah, that's at my 50.
but it's
Yeah.
off the 666. So it's not
Mhm.
his grade A setup other than the 1050 cross.
Can I show you the SPY?
Yeah, go for it.
Because on the SPY, this is right here. It is my setup on the SPY.
Mhm.
So I did have my 50 over the 10. And then if the price pops up over the 50, I know it's gonna come back down because it's still, like I said, it's still a bearish, it's still bearish to
Trend.
me.
Yeah.
Yeah, bearish trend. So that's why I entered. So I was just timing it on the 1 minute, but the 1 minute, yes, was bullish, but I know that would fake most people out. So
And
yeah,
that's
that's why I
good.
take
That's
that
good
trade
that you're
there.
getting used to SPY versus ES. Like right now, I'm at the stage where I'm primarily using ES. I glance at the SPY for like gaps, sliver gaps, stuff like that. But if there's no gap on SPY, then I probably most likely not even paying attention to it. I'm paying attention
So
to VIX, the dollar, and the bonds. That I'm paying attention to. But SPY, I'll glance at it if
okay.
if there isn't a gap. But I'm not telling you to not pay attention to it. If you're getting used to it, for all means, use it.
Yeah.
I was
Well,
used,
I just started looking at ES actually. I've been looking at SPY, I'll say, since ever.
yeah, and that's the way I was. And then I was like, I'm used to ES. I trade it all the time. I see it 18 hours a day. So me and ES have that special bond. Um, uh, instead of SPY, but
Okay.
like Brandon says, I've always paid attention to SPY before because Brandon says during open, pay attention to SPY. Because
Mhm.
why? Because SPY is kind of managed by Fang, right? Remember today he said, pay attention to Fang because Fang, it's the biggest companies in SPY, so they have influence in SPY. And those little nuances where he says it's gonna, if SPY pops up first, then Fang will follow, or the inverse of it, right?
Mhm.
If Fang is dumping, then SPY may follow later because the dump is too hard to avoid. on SPY
Cool.
because Facebook, Amazon, Apple, Netflix, Nvidia, Google, if they're all dumping. There's no way SPY can go up unless it's manipulation.
Perfect. Okay. But also, I mean, it's a good point that Lasagna Cat just mentioned. Like he said, this is not my setup, but in that case, like I said, right, I'm mostly looking at SPY, and then I'll do my entry whatever on ES. What can you say about that? Like if there's something that I need to correct on this one, Semper.
No, if you entered around this area right here, you're good because this is your 50 estimate, right?
Yeah.
Yeah, that's and it's a
The
lower.
50. Oh no,
It's a
that
lower.
one that you're pointing at is the 200. It's the 200. The 50 SMA is this one right here, that red bar. That's the 50 SMA.
Yeah, I would have probably got in at the break of the 50
Mhm.
to like confirm down. But I mean, that's something that you could easily get used to because all the moving averages are resistance because they're on the
Yeah.
bottom. I mean, they're on the top.
Okay. Perfect. Okay.
No, you're good there, and that's why I think I had asked you because you showed me the 1 minute screenshot, and I was like, "That's not your setup," and you're like, "Oh, I was trading the 5 minute SPY." I was like, "Oh, okay, I see it now,"
Yeah.
which is fine
Yeah.
because right now the 5 minute ES chart has been my go-to chart. For some reason, 5 minute I just like it seems a little bit more clear the last 3 or 4 weeks. I'll enter on the 1 minute sometimes, but I'll use the 5 minute to kind of predict or anticipate, forecast, whatever you call it, what
Mhm.
price action might do. Um, what price action might do, for the next 20, 30 minutes. And the 30-minute chart might tell you that as well. The 30-minute chart tells you, oh, it's bullish or bearish. In this case, it's bearish. It can go all the way down to the 10 SMA or whatever moving average and try to correlate that to the 5 minute. What I mean correlate is like, okay, on the 30-minute, it can come down to the 50 SMA, which correlates with the 100 EMA or the 10 SMA on the 5 minute.
All right.
But no, that one was good. Um,
Okay. So that was for the 5th. On the 6th, I took a trade. The trade was green on the 6th, September 6th, September 6th. Yeah. Yeah, I took a short. Yeah. So yeah, like I said, beside that, the rest of the week, my trades were just getting better. Like I said, I was just working on my entries, when to get in, and I find that I was getting better on my entries.
Yep.
It was September 6th. I have two on September 6th. What is this one? Oh, that is just a 5 minute, just to show you. Oh, yeah, there you go. So I was looking at the 5 minute. I was timing my entry on the 5 minute. So a touch, well, whatever. It looks like a tag of the 10 SMA, but I did weight it, as you can see, right? Right here. So yeah, this is the same chart we're looking at. So that's what happened here.
Yeah.
So this is where I took my entry and brought
That
it down.
looks picture perfect on the 5, especially how you
Yeah.
closed in. This is what I mean, that trail stop.
Mhm.
So you could have put your trail stop on the 10 and still locked in right there around that area. But I
Okay.
recommend the trail stop after you lock in your first target.
Yeah. On this one, but when you said what to, like my, you said what to tag my stop with the 10 SMA?
Yeah, your trail stop.
So it would have just write down that 10 SMA, I guess, whenever.
Yep. On NinjaTrader, you attach it
Yeah.
to the moving average and then you can offset it. I usually offset it, 2 to 4 ticks
Okay.
above or below whether I'm going short or long.
Mm-hmm.
I'll hit my first target and then I'll just put a trail stop on the 10, the 21, or the 50.
Perfect. So yeah, it was really a down day that day. So I was just following the trend. So I did take out a couple of trades, but then there were, like I said, there were green trades.
Mhm.
But I only, yeah, that's it. So we tag that, go down, tag that, go down, tag that, go down. That's what I was following during the day.
And look at
I
this.
think it's on that day that you took that monstrous trade you won, if I'm not mistaken, no?
The 6, yeah.
Yeah. So you
What was
got
the
in
6? What was
somewhere around
yesterday?
here. Yesterday was the
No, it was
7th.
7th.
Oh, it
The
was
7th,
yesterday?
yeah, yesterday.
Okay. Then wait, let me see. So I took a trade 2 on the 7. Okay, let me show the 7 and then you can talk about that trade that you did you want it to say anything else about this trade or
No,
I
you're
close
good.
it?
Yeah, you're
Okay.
good.
So then we jump into the right here, which is what? So this is the 7 on the 7, one short win. So yeah, I took a trade here. Oh, what? Oh, okay, yeah, I marked it where I got in. So yeah, this is the wait. Okay, no, it's your thing that's still on that. It's the bar that you put that's still on this. I was like, how do I have a bar already there?
Hold on.
Um, all right, one short. Right.
And
So I
this you
just
were
wanted to
using
see.
the 5-minute too?
Yeah, well, yeah, exactly. So I was looking at the 5 minute to time to get the trade, but then I entered on the 1 minute. This is what time was that? That happened around 10:45 to 10:55. Yeah, yeah, this is the trade of that day. Like I said, I was just yeah, the rest of the week was really good. So I can't complain on it. So again, short because you have your 10 over the 50. So I was shorting the pop.
Mhm.
And now if we go to the 1 minute, yeah, that's it. So yeah, this one it was really my entry. I think yeah, maybe I could have gotten there on that second candle, but I waited till the third candle. I don't know why I waited till the third and fourth candle.
Yeah, that's the only thing. Like when it's this strong, it's you'll be scared to get in on that second candle right here. But
Yeah.
right here, you're keeping an eye on the 10 SMA because you could have got in right there, right? But it could also went like this.
Yeah.
So what you're doing is if you do get in on that trade, you're talking to yourself the whole fucking time to that trade. So you're like, okay, I got in right here. What can happen? Okay, it can go to the 10 and catch it,
Mhm.
right? Because it can
Oh
catch it
yeah.
and bounce to the 666 and tag the 666 over here and then go down. But you're telling yourself right here, wherever you enter right here, you're like, okay, it can go to the 10. If it catches it there, what's my plan? Am I gonna stop out if it pops, or am I just gonna let it play out to my stop? Because if you entered here, your stop should have been right there. That's the only thing I would recommend. Because
Mhm.
you right here would have been like to here would have been like 2 or 3 points, maybe. I'm not sure. I can't really gauge it, but that would have been your stop, and you probably would have never hit it, and until like way over here, till this candle.
Okay.
But yeah, that's the only thing that I would say. Just talk yourself to the trade. Okay, it busts through the 10. Where can I go? Okay, it can go to the 50 or the 100. Because it breaks through, and then you start seeing these long bottom wicks, and then you might want to think about closing or locking in.
Mhm.
And then right here, this should have been your sign to get out. RSI. So you got in up there, but your target is like, you'll treat the 50 RSI as like over cool or over hot. Once it hits that, lock in 50, 75% at the over cool, over hot, and then attach it to the 10 SMA. And you would have locked in right here.
Okay.
Would have locked in here, here. So sometimes when you don't have targets, use the RSI. Because it can come all the way down, right? It busts through the 10. Okay, where can it go? It busts through the 10 and created a lower high. Okay, that's kind of divergent, right? Because it's still going up, kind of. You want to see a lower high on the RSI. And then you're like, okay, if it busts through the 10, I want to see it go down to the 50 RSI. Because it could do this, hit the 10, and then come back and hit the 50. And that's what you want to see. When you see, it comes down, right? This is a lower high right there. When you see RSI bust above this is the last lower high, right? Would you guys consider that the last lower high from this down? Just from here.
Yeah, okay.
That's your last lower high. When you see a higher low above that level, you should think reverse. This wasn't really a higher low off that level. I would have liked to see it like this instead. That would have told me, okay, we can go up. Because now you're creating a higher high and you're creating a higher low down here off that support.
Okay, so this trade, I think everybody was looking at the chart, but I missed that whole move up. I didn't expect it to go up, whatever. Yeah, and I think that's where you got in. You got in here, and then you just kept writing it, and then I was like, okay, let me just get in on the pullback. So I just took the pullback as a trade on that one. Right here on the 5-minute, it happened here.
Yeah.
Yeah. So I took that pullback and then write it down to here, I think. Yeah.
Yep.
Wait, where is it? That's that. That's it. That's it. So yeah, these are the trades that I took during the week. My B trade setup, I didn't really. I don't think I have taken a trade that's my B trade setup, if I'm to be honest. No, I don't think I have.
Well, in this screenshot, it would kind of would have been your B grade, but you're not getting in long, you're getting in short.
Yeah.
So it's not your B grade.
It was just a pullback. Yeah.
Yeah. Yeah. Just try to focus.
Focus more on
the A grade, but then do try to trade your B grade. If that's not your B grade setup, then look for another B setup. One that you trade more often, because you've traded other B grade setups that are not your A plus setup.
Okay.
So maybe find a B grade setup if you're not liking your B grade setup that you said last week. Find a different one.
I pay more attention to it this week to see if it presents itself more.
Yeah.
It's we should have a longer week. So
yeah, I'll help you out when I see your B grade setup.
Is Monday payroll? I'm just thinking. Do I have to do payroll on Monday? Yeah, right. I don't. Yeah, I think I have to do payroll on Monday. But yeah, just thinking out loud. Because I was like, okay, I can get more trades because
Yeah.
but yeah, that's it. For me,
Cool.
like I said, I find that I'm getting better. I find that my entries are getting better. Like, yeah, really still the target. And like you said, you're gonna show me how to increase my size or something like that.
Yeah, we're gonna.
So make
So how many?
two.
We're gonna
I
get.
don't. I
We're
only
gonna.
use two contracts. I only trade with two contracts every time. So that's why I lock half, and then after that I sold, and then that's it.
Okay. So this whole week, you have to keep track, and this is how you want to scale up. Is you want to keep track of all your trades that you took during
Mhm.
that. You don't necessarily need to keep track, but I recommend you keep track of all the trades. Not if like journaling, but just keep track. Okay, I usually take 20 trades. I had 16 green trades versus 4 red trades. Right?
Okay.
That's pretty good. Um, Another way you can do it is, okay, I hit my daily goal 5 days straight. Once you hit your daily goal 5 days straight or 10 days straight from Monday to Friday, or if you trade 6 days a week from Sunday to Friday, if you hit your daily goal for 2 weeks straight, increase your contract size, like double it.
From 2 to
So
4.
yeah, so if you started with 1, you double it to 2. If you started with 2, then double it to 4.
Mm-hmm.
And then repeat the process again. Only trade your A grade setup first. If you have a B grade setup, then trade it, but be cautious because you might give money back.
Okay.
And then repeat the process for another 2 weeks. Okay. And this is totally up to you. And because your own confidence level. I'll notice it by your way you're talking or the way you're calling out plays or whatever, but I don't know really how confident you are. Because
Mhm.
I've done it 2 ways where my first daily goal, I hit it for 2 weeks straight. Cool. I increased it to 2 contracts because I started with 1, right? I increased it to 2 contracts. And then I hit my daily goal again for a whole week. And I was thinking about increasing it. So I traded one more day on Sunday and it was green. So come Monday, I increased it to 4 contracts. And that was only 1 week. But that's me carrying over 3 weeks of confidence, right?
Okay.
I had 15 days of nothing but green days with like 2 red trades the whole time. That's why I'm trying to tell you, like, keep track of your red and your green trades. And then maybe if you hit your daily goal every day. If you're hitting your daily goal every day or surpassing it, then yeah, fuck yeah, you're ready to increase your contracts. But you're still playing the same thing. But this time you're gonna lock in at your target 75% of your position and let some ride. So if you start with 2, I'm not sure if you're doing that now, but next week or whenever you decide to scale up, you're going to increase your contract size and increase your daily target. Your daily target by 50% to 100%. So if your daily target is 50, you can either increase it $50, which is 100%, or increase it, to $75. So $50, it'll make you $100 daily goal. That's doubling it up, or just $50, or I mean
Okay.
$75.
Okay. Well, then in that case, so far, like I said, I've been trading with 2 contracts, and my target was 500 a day. Like I've been hitting the 500 a day within, like, let's say 3 trades. So
Yep.
I'll just see how long okay, so for this week, I'm trading with 2 contracts or 4 contracts, or do I not increase yet?
That's up to you. I don't know how many trades you took or how many greens out of reds you've had.
Okay.
So
I'll
if you
keep track
tell me,
as well of that.
if you tell me, oh, I took 10 red and 10 green, I'll be like, yeah, you're not ready to scale up yet.
Okay.
But if you
Got it.
took 15 green and 5 red, then you're maybe ready, maybe one more week.
Mm-hmm.
But if you had fucking 20 out of 20 or 18 out of 20, you're like, you're ready to scale up for the next step.
Okay.
So from like 500, your next daily goal, I would make it 750 or 1,000. Whatever you feel comfortable with. If you think 1,000's too much, then reduce it to 750.
That was only I start shaking. I gotta say, I start
But
shaking.
but push yourself. You don't want to push yourself too much, and you don't want to not push yourself enough. Know what I'm saying? Like,
Yeah.
if you increase your contract size and you only bumped up your daily goal by $100, you're like, that's kind of undercutting you. You're like, or let's just say you raised it by $50. So instead of 500, you're 550, and you doubled your contract size. That's not pushing yourself. That's like
Okay.
mediocre. You're like, that ain't shit. You want to just keep stacking these wins, stacking these small wins, stacking these base hits. And then you're going to be like, oh shit, I caught 20 points. I hit a home run. Those will come. And as you hit more home runs, you're going to get more comfortable hitting home runs. And you're going to be catching, instead of 5 points, you're going to be catching 10 points all the time. And that's how you scale up. Or another thing that you can scale up is, instead of increasing contract size, you're working with 2 contracts, right?
Yeah.
And what's your normal like average points per trade? Like, is it 5 points, 4 points?
From 4 to 8, I'd say.
So then increase it from like 8 to 12. That's a little bit harder to do. That takes a little
Mhm.
bit more experience to do. Wouldn't you think, right? Because if you're used to catching 4 to 8 points and we scale you up with contracts instead of points, you're still going to hit your points, right?
Yeah.
With a little
Yeah.
bit more contracts. You might get a little bit more nervous because it's, instead of $25 per tick, it's $50 per tick or whatever it is, right? So you can do it that way too. I recommend you do the contract size instead of the points. The points will come later. The points will work on later. So increase it by your contract size. And then when you get to a month or 2 months, we're going to up your points. So from 4 to 8, we're going to up your points, to 8 to 12 or whatever we make it.
Okay. All right.
So yeah, you do that, figure out what your trades were like or what your win percentage is like. And then if you hit your daily goal for the last 4 weeks, and I would say, yeah, you're ready to bump up.
Okay. So the week of the 11th, yeah, okay. I'm gonna challenge myself to do that. I'm gonna raise my contract from 2 to 4.
Mm-hmm.
And still doing the same setup. My A grade and my B grade, which
Yep.
haven't showed up really the B grade, but yeah, my A grade setup.
Yeah.
But like I said, the only thing is that I trade either the 5 or the 1 minute time frame. That's where you might see something like, let's say, different. But that's it.
Mm-hmm. Cool. Well,
All
let us
right.
know when you increase that, and then what your new daily goal is. Maybe by next week you'll be good. Or you said the following week, huh?
Yeah.
Yeah. So that's the
Okay.
way you'll scale up, and then you either stay comfortable with that or Scale up to 6 or 8 contracts. It's been almost
Yeesh, no.
2.5 years, and I'm barely getting used to 8 and 10 contracts. I've traded
Yeah.
4 and 6 contracts for like a year and a half on ES. But
Yeah.
and then we're gonna see Easy posting those big greens. Like, yeah.
I'll start with 4 contract and then we'll talk. Yeah,
And
4 contract and we'll talk.
the reason why we scale you up slowly is because we don't want to add more pressure and smash that confidence that you've already built for the last 4 weeks. That's why
Yeah.
we're not doing from 2 contracts to 6 or 10 contracts, because that's just way too much pressure. And as soon as you see one tick down and it's minus 250 points or $250, you're gonna be like, oh, I gotta stop out.
Yeah. Oh shit, I'm out. I'm out.
Yeah, you're slowly getting
Okay.
used to, seeing that red or that green. Um, as you're in the trade.
Okay. All right. So now you have a trade that I would like to see.
Yep, I'm showing my screen. Oops, hold on. Oh, Easy was talking about this trade right here.
Yeah, it's that trade. Yeah. Me, I took the pullback, you took the whole trade.
Where'd you get in?
I got in on top right here at the like
Over
let's say
here?
almost around your red candle. No, on top. I
Oh,
only
up
took the
here.
pullback.
Oh, you played it down.
Yeah, I played it down.
Bless you.
Right, thanks.
Um, yeah, so I drew these zones. This zone, this bottom zone was heavy support way before this came down. I think it bounced up over here and I drew it and I just kept extending it this way, extending it this way. So right here where I got in, I seen this RSI coming down to over cool. And then I got the RSI cross. And this was me testing out supply and demand zones, and that's why these zones are drawn out. I'm trying to be well-rounded where I can use supply and demand zones, I can use price action, I can use moving averages, or I can use a fib. So like that, I have 4 different plays that I can play. But I don't recommend it to somebody just barely starting out. Easy, as your setup gets better and you get more laser and more of that, then we're gonna start adding stuff like this to your repertoire, to your tool set. Where you're gonna be like, okay, this is price action move, because you can call out, okay, this is my price action trade, this is my moving average trade, this is my trend trade, this is my fib play or trade. Call it out. Call out what you're using. Like this one would be my supply and demand trade. And basically what I seen is I seen a big pop right here off that zone. And this is like the 5th time it's popped. So I seen this wave right here. I kind of ignored this wave just because it was at the bottom and basing. What I wanted to pay attention to was a following wave. So this wave right here could not even get to half of this wave. So that kind of indicated that sellers were kind of getting out of the way. Then this little move right here, even though it was kind of lower than this, I seen the MACD and I wanted to see a higher low right here created. See right here, it's kind of like a higher low. Oh, now it's fucking. See right here,
Okay, nice. Okay, yeah.
higher low. My line's not straight, but that's, or you know,
So even higher low on the MACD as well, not just the RSI.
yep. That's just something that I've come to notice.
Mhm.
So a higher low there, hit the overcool here. Then we had then it just hit the zone. I was kind of paying attention to this timeline. This is called a price level, these green lines. Instead of time cycles like Brandon is practicing and trying to figure out, these are GAN price levels. So I came here, didn't tag it, came here, got closer, didn't tag it. That candle, the way it opened, that doji right there, and I love dojis. That was my over under level. I told myself once it red candles came down and I seen that doji, I said that's my over under level because it lines up with my zone. So if it breaks below, I'm not even thinking about getting in. The candle opened up right there and it was just flopping up, down, up, down. I said, like on the third or fourth time that it went up, I just hit I hit the by the bid and it got me in right there. And then we seen the RSI cross right here. Right here, like we got it at that doji. Right on that red candle. Man, my lines are all jacked up. But let me see.
That's
Yeah, see right there. Because I like to look at that cross. The RSI cross right here. Who was it? Was it Pete the Cat or Sergio? Somebody. Somebody said that they don't like to see the flap up and down and they use the 3-bar average. That's what I was using right there. We got the cross, we got that, and we held the doji. The next one, I said if it holds the doji, it pops up one tick above it, I'm getting in. Created a higher low, and then we got the MACD on the next candle. Right here. We got the MACD cross. Right about there. We got, and usually this is what happens. The RSI crosses, then the MACD. You see it right there, cross right there. That's what gave me a little bit confidence that it'll at least go up to the 50 SMA. So that was my, okay, if it doesn't make it over the 50, I'm getting out. But this big green candle smashed through the 50 and then it smashed through the 50 RSI. It was already up here. It was already up here. And just the way that, look at how steep that is. There's like no stopping that. And they were spread apart as well. And MACD was just way spreading apart. Choose. And then once this bar right here, this second, where this big bar, the third bar, it beat out this wave. I told myself it at least had strength to go to the 200. On this play, I locked in half position at the 200. And then this candle started getting smaller and smaller and it hit the top of the zone. I locked in right there. And lo and behold, look at, I took that trade off a price action move. Then I switched over to moving average play. Where I came back, I wanted to see a pullback to the 50 SMA. We shied it, but we held the 50 RSI right here. And one of the biggest patterns on RSI that I see all the time, and you guys should pay attention to, is the inverted head and shoulders. After it got up past to the 200 and it shied the 666 class, what's the next level that's gonna hit? After it passes the 200 and it smashed it and it shied the 666, it's just like the fit play. If it's going up to the 161 and it shies it, it's probably most likely going to come down to the 100 to gain some strength, to go up, back up to the 161. This is the same play. Shied it. We got the 1050 cross. Oh yeah. We got the 1050 cross. This is where I got in. Because it held this, came back, created a higher low. MACD wasn't that great. Got in. I told Easy on this play that his setup was over here on this blue candle, on this blue arrow. That's his setup. Because we got the 10 over the 50, and then it comes back and tags the 50 right there. Loops a RSI. And that's why I had told him right here, because RSI had came back above and we got the MACD cross right there. Not much meat. And I told him not much meat left on the bone if you would have entered here, because my target would have been the 666. And I got in right there and I closed out right there and I got stopped out. Profit stopped out right there. And this is what I mean. I hit my target or my where I lock in 50 to 75%, and then I attach to the moving average 4 ticks below. So I got it right there.
A question that I have on this one, like during that whole consolidation that's happening, you still holding, or did
Yep.
Oh wow, okay.
Never even came close my stop. My stop was way down here.
Okay.
My stop, I didn't attach it to the 50 SMA, but it was 2 ticks. It was on this green line. It was 2 ticks below the SMA, the 50 SMA. And it didn't even come close to it. So I just let it ride. Right here, I was getting right here on this candle, this big red candle, how it smashed through here. I was like, oh, fuck, this might stop me out. But you just stay in and it didn't even come close. Like right here, I was still up like 50 cents or 52 ticks on this doji right here. But I never seen a red volume beat right here. See this red volume beat? There's no red volume beat, dude. Look. No red volume beat in this consolidation zone. No red volume beat. Look at this one came the closest. This one and this one. But no one could beat this one. And it just doesn't it look like like you're holding up your middle finger right there? Like fuck you, sellers. And then boom, squeeze. But yeah, hopefully that helps you. And that's why I wanted to first you're gonna do your moving average setup, right? Then you're gonna either learn how to read price action, or you're gonna learn how to read supply and demand or support and resistance levels.
There was a monster trade that.
Mhm.
Yeah, monster trade from like what, 430 to wow, to 60. Yeah, almost 60. Yeah, that's a monster trade.
Yeah, thanks. And you'll get those. Trust me, I always used to catch. I mean, you guys will see me catch 4 to 5 points, and I'm happy with that. The home runs will come. The home runs will come.
Hey guys, I gotta jump off and go to my next meeting, but Semper, I'll mail you the timestamps.
For sure.
And good going, Easy. It was great, great catching up with you and your progress. Awesome.
Take it easy.
Thanks.
All right, take care, you guys.
Cool. Does anybody have questions? Want to share a recap? Want me to critique your trade? I don't see no questions. Oops. Cool. So easy next week.
Yeah.
Figure out if you're gonna scale up or not. Find a true B grade setup or even a second A plus setup. Like Lasagna Cat, what he used to use, he used his fib setup and then he used his moving average setup.
Okay.
But you're not using fibs. I haven't heard you mention fibs.
Nope.
So I'm not gonna throw that into your setup unless you want to try fibs. And fibs is
I'm
fibs
more
is a
comfortable with moving average.
yeah, fibs is a totally different beast because you actually have to draw out the fibs. And I'm familiar with the hidden fib setup, but I'm not 100% comfortable teaching the hidden fib setup. So I can teach you regular fib, or you can have a moving average fib or a moving average play, a different moving average play. Yeah, if you want to just trade your A setup, then just practice getting comfortable with that setup. You're just gonna be that more laser. And
Yeah.
we could always add a different setup later. Because
Yeah.
the reason why you kind of won't need a B grade setup is because with the Lasagna Cat, um he only concentrated on long setup. That's it. It was just long. With you, you're trading short and long. So you don't have trouble switching from long to short and short to long. But you will have trouble when it gets choppy. You're like, well, fuck, I don't know if I'm getting in short or if I'm getting in long.
Yeah.
Especially with the moving averages when they're jumbled,
Yeah.
you're gonna be like, oh fuck. So that being said, you might want to look into price action or support and demand zones.
Okay.
Just to kind of help you deal with those choppy days where you're like, fuck, I don't know if I should go long or short or just stay out. The price action will tell you either price action will, support and resistance levels will, or supply and demand level will tell you either get in or short.
I mean, Brendan is able to decipher days that it's gonna be choppy. Like I don't know the days that's going to be choppy or not. So that's why I guess it's
That
those days that are messing me up with my moving averages.
yeah, and that's what you'll have to kind of learn to either use your moving averages to learn how to play through choppy days, through data days, through open, through market open,
Mm.
So you have to start, if you're not going to have a B grade setup, then at least take screenshots of data days, any news days,
Mhm.
choppy days, keep track to see if you see, okay, this could have been my A grade setup, but let me try to figure out what my A grade setup looks like in a choppy day.
Okay.
Because the moving averages are all fluctuating, fake crosses and doing all these crosses, and you're all all close together, and you're like, fuck, I don't know which way to get in long or short, because the 10 is under, but the 50 is over, but the 666 is down there, and you're like, oh shit, I don't know what way to do. So yeah,
Okay. I'll
concentrate
do
on
that.
those two. Yeah, and if reading any other books, the nature, what's it called? The powers of nature or something. The 48 laws of nature.
Oh, the 48 laws of power or something?
Yeah, yeah. Powers of
Okay.
nature. Read that one next, 'cause that one's gonna help you put your emotions in check. Because we all come from different backgrounds and different like childhoods,
Mm-hmm.
so we all have different types of baggage. And that book right there will help you identify that baggage and keep it in check. Like, if we're abused when we were little, then certain emotions start to rise when you're nervous or you're scared or whatever. And that book will be like, okay, I feel like I'm getting scared right here, or if I'm getting nervous, I need to do this to correct it. Either step away, go work out, do whatever.
Okay.
That book is going to help with your emotional side of trading. It's a good book.
All right. But I feel like I'll re-listen to the first one, the
Yeah.
Mark Douglas one.
Yep.
And then after that, I'll redo the other one, the whatever, and the Wolf, and before I tackle a third book,
No
like
worries.
just to get something else out of it, you know.
Yeah, definitely. I like the way that you applied the Mark Douglas. You didn't try to apply the whole book to your trading. You took out what applied to you. And like I told you before, when you re-listen or reread that book, you're gonna learn something new because you already applied one of the lessons, right? So now
Yeah.
find a different lesson and apply it to your trading.
Perfect.
But you're doing great progress. I'm seeing the confidence. I'm seeing the better entries. You're getting there. We're just, taking it one step at a time. One step at a time.
Yeah.
Don't chase the money. The money will come
Mhm.
later. You want to
Yeah.
establish a good foundation of fundamentals. So like that, when you do scale up or you do add another thing, you already got the fundamentals down. And you can always fall back to your A grade setup. The only thing I warn you about is when you're trying to add other stuff, you might get overwhelmed.
Okay.
But just take it one step at a time. And if you have any questions or have any issues, reach out to me. I could probably help you through those issues.
Perfect. Thank you.
Yeah, no problem.
Hey, Sempre, I have a question.
What's up?
So I did take a trade on Tuesday,
Mhm.
and if it's okay, I don't mind sharing my screen. I
Yeah,
took
go
a
for it.
screenshot, and I just want to hear your criticism because I
Sure.
know things can always be better.
Yeah, definitely. Yeah.
All right.
That's what I'm here for. Oh, let me stop sharing it. You should be able to share.
Goddamn. Yeah, allow. I guess I don't know if you can see my screen.
No,
screen?
we can't see it.
Share.
Something's coming up. There we go.
Okay. So this was on Tuesday.
Mhm.
So I'm coming from the Fibonacci thing, and I'm
Yep.
trying to back off of it because once I have 2-3 fibs, man, it gets confusing, you know?
What you're using 2 or 3 fibs like within a fib, like the hidden fib system, or what are you
So
fibbing out?
so I used to plot a fib on the 30-minute, I'd plot a fib on the 5-minute, and then I would plot a fib on the 1-minute. And then once I started seeing those 3 fibs all together on the 1-minute chart, the lines would kind of mess me up,
Oh
you
yeah, you're
know?
gonna get hella confused.
Exactly. So it's all right, I gotta back off with that.
No, like if you're gonna use fibs, what I recommend is you use a daily and then the intraday. Or if you're using Brandon, use a weekly fib and then the intraday.
So I using Brendan's fibs is gonna be my next thing that I want to try out.
Mhm.
But so for now, I've been using the standard deviation system,
Sure.
right? So on Tuesday, um, I circled and everything. I got the half deviation right up here,
Mhm.
and I got the mean, the yellow right there. So my target was once we were up to the half deviation, close to the pre-market high level.
Mhm.
On the 1 minute, I noticed that we were coming down. We were already down below the 10 SMA, and I went with the short. So my first was my entry, and then my second was when I got out of the short.
Okay.
So I hit the mean, you know.
Mhm.
So my thing is I just don't have I mean it was like a couple points, right?
Yeah.
I think it was like 4 points.
Mhm.
So my thing is like, man, I don't have like the guts to like really hold on for that, 5 minute range from like, half deviation to the other deviation. You know what I'm saying?
Yeah.
Even though like I see the conviction where I saw like, the RSI, the MACD, and the TTM squeeze, which was giving me the dead giveaway, like, all right,
Yeah.
things are gonna come down for the pullback. I even saw it on the 1 minute. It's just, I don't know. I feel like, the thing is that I'm doing one contract at a time, right?
Yeah.
And if it goes like, 5 points against me, I get stopped out,
Yep.
and then it's like, all right, I really gotta like perfect my entries, I guess.
Yeah, that the entries will fix a lot of the stuff. That's what I had the biggest issue with. And the thing that helped me with my entries and my targets was the fib level. But now
So,
I don't use the fibs no more because I can see the fib levels without having the fib on the screen. And you'll get to that point once you use the fibs for a while. Um, One thing, if you're gonna do the 30-minute and the 5-minute and the intraday, color them different. Like do blue for the week, for the 30-minute, do white, like all the lines, do them all white, you know? So
yeah,
like
yeah,
so
yeah,
like
yeah.
that you can identify, okay, a white line that's a 30-minute or 5-minute. The 30-minute fib that's blue, so I know that's coming up to the 30-minute resistance. That's one way that can help you kind of discern the difference between weekly or 30-minute, 5-minute, and intraday.
Hmm.
Or what I used to do is I used to just fib the body of the candle because Brandon taught us back in the day the half candle retrace play after hours. That was like one of my favorite plays after hours. Uh
After hours.
yeah. Yep.
Okay, that's interesting.
Yeah, so like when market closes and the ES candle is like closed already for the day, I would
Right.
fib the body, right? So you fib the body and then you pay attention where ES opens up. If it opens up inside the body of yesterday,
Hmm.
then the half candle retrace play is in play because it's inside. So now price action opened up inside the body. So now you want to see a higher low, like let's say it opened up in the body from yesterday, but at the bottom side, right? The bottom side of
Yeah.
the, so then you want to see higher lows. Once you start seeing higher lows, maybe a moving average cross like the 10 SMA versus over the 50 SMA, then you would get in on a higher low off the 10 or the 50 SMA for a target of the 50% retrace. And that's a pretty common play that happens. It hasn't happened. It happened yesterday or last night. It happened, even though it was a small doji body. It still tagged it, and then that's your
Okay.
target. And then you wait for the next setup. Then you wait for the next setup, which price action could smash through the 50% of the fib or 50% candle, and then wait for another higher low off the 50% for a potential to go back up to the 100% fib, which is the top of the body. So there's that play. And then there's, because if you fib this, you're like using
Because like,
you're using two systems at the same time, right? You're using the standard dev and the fib.
well, basically, sort of, yeah. So like, I mean, like I see what you're saying. Like you can see with your own eyes, because without plotting it, I can see like from here to here. If I was to plot out the fib, this is basically like, almost like a golden pocket
Yep.
retrace right there.
Yep.
Let's just say.
Yep.
So like, in that sense, I can see it. And on top of that, you have the 200 moving average
Yep.
on the 5 minute and the 1 minute. So that's like a dead giveaway. That's an easy short right there,
Mhm.
you know. But I didn't play that one because I was too chicken for that one.
Well, you can be, and that's. I think we got to break it down, either to use the standard dev for right now, or the fibs.
Or the fin.
I recommend you use the fibs, but don't use so many fibs.
Okay, so you think that like fibs it's better
It's gonna
compared
help
to
your
like
entries and your targets. It's gonna help you keep calm when you're getting to your target, right?
okay.
So like, let's say you entered at the 50% retrace. Let's say, hold on a sec. So, let's just say you fibbed it from here to here, right? To the downside. So your 161's right here and your 100's right there, right?
Okay. Okay.
So 50% would be a route right here, right? So once it tags there, you're getting in wherever you get in. I'm not sure if you get in when it tags your zone or if you get in when it tags your zone. Like let's say the 50% right here or the pockets right here.
Yeah.
Do you usually wait for it to hit and come back
No,
down,
I
or
I usually wait for like some sort of, maybe like a couple hits, like some sort of uh,
confirmation?
confirmation, because like right at the open, I know like you see like how it's got all those wicks,
Yeah.
like that's telling me like that's resistance right there. That's a strong battle,
Mm-hmm.
and I see it coming down in a sense of obviously with the red candles, and it's also hitting that half deviation mark. But yeah, I do wait for that consolidation in that golden pocket, something that gives me like a dead giveaway. Like, all right, it's gonna turn around
Mm-hmm.
because I've witnessed where like it just goes right through it.
Yeah. What will help you is talking yourself through the trade, kind of like Brandon narrates it for us.
Yeah,
It's gonna help calm your nerves, and not only that, but train your brain. So like in this play, right? You said you got in right there, and then it came down to here, and then you got out somewhere, over here, right? I'm not 100% sure
exactly.
what you got out. So let's just say you got out on this doji right here. It didn't break any levels to tell you that it might bounce right here, right?
That's why I was scared to like hold it through.
And when you're talking yourself through the trade, you're like, okay, what's this standard dev, right? This white line.
Correct. I mean, yeah,
So you're like, okay, I'm in right here at the break of the 50. Um, okay, so it's gonna come right here. What's your target? Did you have a target
so
or
my
no?
target was to the mean, because I was trying to just do like a scalp.
Uh-huh.
And I saw like on the MES where, I think it was like a 4 or 5 point difference.
Mm-hmm.
And I was like, all right, to me, I'm good with the target like that. A 4 or 5 point scalp.
Yeah.
I'm happy with that,
Mhm.
because I'm just trying to get the consistency for
Yeah.
now.
Yeah.
But my thing is, if I want to start going on to like a longer trade, how do I go about, having the guts to like really hold it? Because right before I took that trade, I had it in my head like, okay, it's at that half deviation mark right up here on the 5 minute.
Mm-hmm.
My target literally was that yellow line, which is the standard deviation on the 5 minute.
Mm-hmm.
I think it's like the +1, and that was my target originally. But I was like, I'm too scared. I'm gonna chicken out. I'm scared that it's not gonna go all the way down there, even though like it really did, basically almost.
Mm-hmm. Yeah. So if you're looking at the if you're getting in because of the 5 minute and this is your target, remember Connor when he used to do standard dev? He used to jump
Yeah.
to like the what was it? Six
Is there
hour,
like
6 hour, and 4 hour. He used to jump to the 4 hour and then the daily, but each level he would mark off, right? He would mark off like the daily plus one dev, whatever price action was close to.
right?
But that line would transfer over to the 1 minute. So let's say this was your target and it transferred into the 1 minute. Let's hypothetical, right?
Right.
So now you got a target right here. Now you're walking yourself through the trade. So now you're right here, you got in right here. Your first like sign of, so you only trading with one contract, you would
Yep.
lock in 4 to 5 points. That's awesome. That's $25, 20 to $25. So you're walking yourself through the trade, you're in here, you come to this level, look at the RSI, where is it at? Below the 50, that's bearish, right?
Correct.
MACD, you got the MACD cross right there. That's too bearish. You got the TTM down, 3 bearish. I don't know if you use volume, but that might help you a little bit.
Yeah, I am tricky on that volume. Like, I don't know. It's like hard for me to understand it to like really like when you were just talking with Easy about the volume bars, with the middle finger and everything, like,
Yeah.
when you're talking about it, I see exactly what you're saying. But once it's during the day and it's time to trade and everything, I just don't have those eyes. I can't see it like that. And
You
I've been trying to do it.
it's how long have you been trading for?
Basically like 3 years.
So you're right there, dude. You're about to just you're gonna have that breakthrough where you're just gonna be like, oh fuck, I should have learned this long time ago. But that's the average. After your like 3 year mark, you get to like, oh shit, you start to see the charts a different way. You start to see them clear, and you just go back over here. So you're walking yourself to the trade. You see that RSI is bearish, TTM is bearish, MACD is bearish. So then what you want to see right here, you see it bounce right here. You're like, oh fuck. Okay, what can happen here? Okay, it can bounce, but I don't want it to bounce and break the 10. Is this your 10 right here? Or what is that line?
The blue is a 10.
This close one to price action, right? This one right
Correct.
here.
Yep.
So what you're telling yourself right here, if it breaks above the 10 and RSI is over here, but no, RSI is not even near the freaking 50.
No.
So you're telling yourself right here, okay, if it breaks above right here, I might think about stopping out, but RSI is still bearish, so I'm still good. MACD is still bearish, I'm still good. TTM is still bearish, I'm still good. That should help you calm your nerves. But if it breaks a 10, then that's when you're kind of like, okay, it might come back and tag the 50. Because that's the next point. Because you start off at the 10, then you do the 50, then you do the 100, and those will be your catch points, right? Where it can possibly be catched. And you talking yourself through this trade, you're like, I'm in, okay, I don't want to see it bust a 10. Okay, it's below the 10, created a lower high, because this is a lower high right here.
Yeah.
Right here, that's a lower high. So okay, it tagged the 10. That's Easy's B grade setup right there. Because across the 50 right here, and it created a lower high off the 10. Where are you taking it? Either to your target or what is this dotted line? Half deviation?
The half deviation, yeah.
So you take it to there, okay? Right now you can't let one ride, but that's what I would recommend. Once you get to 2 contracts, get to your first target, or that's why I started out like, okay, catching 2 to 4 points, because I would lock in right there no matter what. but then I would study the chart, right? So let's say you
Yeah.
locked in right here. And then you're like, okay, it seems like there's a lower high right there. That's confirmation down for another move down. And then RSI is still bearish. What did it do at that pop? Nothing, not really nothing. What I usually like to see is pop up to the 10 SMA and then possibly pop up to the 50 RSI for confirmation down. So it'll
See,
come down like that.
I thought it was gonna pop to the 50 SMA, which is my green line here.
Yeah.
Right here when it tested the mean,
Hmm.
I thought it was gonna go because it broke the 10 SMA. It popped right through it,
Yep.
and I thought it was gonna go hit the 50, but it didn't. It just hit the mean, the center deviation, and then it continued coming right back down. But I see what you're saying. Like it did test it here in this
Hmm.
area,
Yep.
which is like easy setup right there.
Yep. That's his setup short. Even this is probably his setup short, but he's probably getting in down here. But right here, you're like, okay, it tested that dev and it came back down, smashed through the 10 SMA. So you still
Okay.
have strength down. You're right here and it held it right there, right? You're like, okay, that's your break point right there. So now you have a break point, right? So
Yeah.
you're telling yourself, if it gets over that doji, I'm stopping out green no matter what. But usually what
Okay.
happens, so you get this move right here, you're like, okay, me, as soon as it breaks over the 10, okay, is it going to create a higher low? I want to see that higher low off the 10 SMA. So I want to see it pop like that, and then it'll go to the 50,
Okay.
right? Because it's not, unless it's data or some news comes out, there's not going to be a candle that's going to go straight to the 50. As it needs again strength, especially the way it opened. You want it
Yeah.
to, all right, go over here. I'm getting in short, or I'm not getting in short. I'm thinking about getting in long. That's what I'm thinking. But pay attention to the 10 SMA. Pay attention to the 10 SMA. I'm not sure if you're looking at TOS or NinjaTrader, but it'll flap down, down and up, down and up. Right
I
here.
am looking at TOS. I trade on Ninja, but I chart on TOS.
Okay. On NinjaTrader, when you're looking at the chart to trade, look at the 10 SMA. Like right here, look at the 10 SMA still steep down, right?
Okay.
If it was like this, if it was like that, flat, and that's what usually what I tell Easy, like, well, how do you know if it's gonna bounce or gonna continue going? This tells me it's still gonna go down. If the 10 SMA is more flat like this,
If the 10 SMA look like the 50, the green line, then it would be more of a possibility to turn around.
yes, yes,
Okay.
yes. Pay attention to the 10 because if it's like this, it's flat. And I walked Easy through a play that I had where I said I was in long, it went up 3 points, and then it came down back to my entry, and I got stopped out on the play. But it came down to it pulled back twice. You see how
Right.
it's flat right here?
Yeah.
That's how in my play it was flat up here. And then it came down and then it went back up. I said, okay, it might still have strength to pop back up because it was flat. And then it chopped around and then it came back to the 10 SMA. Price action came back to the 10 SMA over here. But this time the 10 SMA was pointing down and I told Easy like, oh, I'm gonna get stopped out. The 10 SMA on this pullback is down. It's not flat. So I'm gonna get stopped out. And guess what happened? I got stopped out on the next 2 candles. So pay attention
Okay.
to the 10 SMA. Like I said, right here is flat. So you want this candle right here. You want that candle to create a higher low right here. You want it to create a higher low off that flat 10 SMA to potentially go up to the 50 SMA.
Okay.
And that's where watching the moving averages, watching the indicators, RSI. I mean, you said it yourself. You had everything bearish. You had that bearish. You had that bearish. You had that bearish. Now you ID'd this. I would throw volume. I know Brandon has it in his chart up here. That makes it a little hard for me. But
Yeah, it does.
Ninja, I don't really pay attention to TOS volume. I pay more attention to Ninja Trader volume because that's for some reason those colors pop out more to me,
Okay.
and I can identify volume really easy. Really easy, I can identify it. And that's why I kind of gravitate to
I guess I
gravitate.
gotta get my head on that volume then.
Yeah, that volume will. I learned volume first, and then I learned RSI and MACD because volume was like the first thing that Brandon taught us when he first started Elites. Volume beats, volume beats. I was like, and I didn't get it until like probably like 2 years ago.
Honestly, I still don't get it.
Next, add volume, and then take a trade, and I can dissect it a little better.
Okay.
But right now, you're good. You just got to walk yourself through the trade and pay attention to the moving averages, especially the
Alright.
10. Like I told you right here, like, see how kind of flat? That's because this move, this leg right here, caused
Yeah.
that flat.
So
But
the
then,
slope of the 10 is important.
yes, in the moment too, like on Ninja Trader, the 10 SMA will pop up and down as
As it goes.
it goes. But make sure that your SMA, your moving average, the moving average flaps up and down, but I have it set to, what do I have it set to? Hold on. What is that? Freaking drawing tools. I have it set to on price change, I believe. Yeah, it's where it says setup and calculate. On calculate, set it to on price change.
Alright.
On Ninja Trader, on TOS, I think it's by default, but on Ninja Trader, you can see it a lot better because that moving at that 10 SMA will flap up and down with the candle going up and down.
Yeah.
It'll flap up and down. And you're like, okay, it's flat. Okay, is it going to create a lower high or higher low off the 10 SMA? When you hear me in the chat saying, okay, it's going to create, I want to see a higher low off the 10 SMA, it would be like right there. It would be a higher low off the 10, right? Because this is a 10. That would be the higher low off the 10. Or if I say a lower high off the 10, then it would be down here. Right here, like that.
Gotcha.
But see, it breaks through the 10, and then it finally breaks through the 10 to the upside. And look at right here, higher low. And then it goes up to the 50. See what I'm saying?
Alright.
It's
Yeah, I
not
see what you're saying.
it's not going to, like, yeah, it can. If there's data and stuff like that, it's more prone to happen that it's just gonna smash through. But if there isn't no data, then stair step it. Okay, it broke the 10. Okay, what can it break now? The 50. Okay, what can it break then? Okay, the standard dev right here. It can break that. If it breaks that, it can go to the median, right? The standard dev, what do they call it? This center?
The mean?
Yeah, the mean. So I can go there, and you're just stair stepping. If you're using two moving averages or two different systems like the standard dev and that, then you have that level. And same thing, if it breaks that level, where's it gonna go to? Okay, that level. Okay, but if in order to reach this level, it may need to pull back to gain strength to go down.
All right, yeah.
And the
Yeah,
RSI, the RSI tells you, look, right here, it tells you that this little pop is gaining strength to go down. Why? Because it didn't even get close to the 50 and it didn't break the 50 right here.
Okay,
Right
yeah,
here.
I see that now. I see that.
So now you're
I
like,
don't
okay,
know,
it's
man.
shy of the 50 and you're like, okay, it's gaining strength to continue going down because it's on the bear channel down here. The bear channel.
All right, thank you.
Yeah, so thanks for sharing your trade and keep sharing them, bud. I'll keep critiquing them and show you how we do it, or try to help you. Like with the 10 SMA, I'm not sure if you've seen that or knew that, but
No, I mean, I remember you mentioning it to Easy,
yeah.
but like, I don't know. I guess like it just takes time for it to like really kick in your head and
No,
really
you're
start
good.
noticing and seeing that,
And create a system. Um, create a system to look at the chart. So like usually what I try to see is, okay, where's price action at, right? Okay, it's above the 50. Okay, it's above the 50. What do I want to see? I want to see a pullback to the 50 RSI right there. Boom. A pullback to the 50 right there. Okay, what do I want to see next? MACD cross or MACD strength. Okay, I got it. What do I want to see next? Right here, volume looks fucked up because it's already kind of slowed down. But when you zoom in, they look normal. When it's open or whatever, you'll see these green bars a lot better and you're like, okay. Or you could be, oh, I see a green volume beat right here. What's price action look like? Okay, it's above the 200. Where can it go? Oh, it can go up to this trend level. Okay, what do I want to see? Okay, it's on overheat. So there's not much headroom up. So what can happen? Okay, it can pull back down to the 50 RSI. What happens? Pull back down to the RSI right here. Or right here. I mean, right here to the 50 RSI. Because there's no more headroom, remember? You're already at overheat, so there's not much headroom. This is what you want to see. You want to see small candles and resistance. Okay, and then you're like, okay, where can I get in? Is one of the biggest things is RSI divergence. Like right now, there's divergence kinda right here because it went lower and then it went a little bit higher. So what do I expect on Sunday? Maybe a pop up to the 50 SMA. And then back down to this trend or fib out that body, fib out the body of the daily. It's a doji level. Okay, so it's a doji level. That's gonna be my over under. Is there any other dojis? There's these two dojis, but that's not in. There's nothing. Not on the daily. On the
See,
weekly.
on futures, I did pull a fib from the all-time high to the recent pullback, and we hit the golden pocket. So when Brandon was saying, we should be seeing a turnaround, I saw that based on the fibs also.
Mm-hmm.
Yeah, from there to there.
That's a weekly. Um, yeah, if you watch the recaps for Brandon, mark off those levels. I don't know if you pay attention to our to futures after hours, but mark off those levels and see if they come into play. Usually they do.
I try to watch both the futures and SPY
Mhm.
together.
Remember,
But
after hours, just concentrate on futures because SPY is not really getting traded because Apple, Facebook, all those are closed. So SPY is not gonna react.
well, just during the day, I watch
Yeah,
both.
yeah.
After hours, I just look at futures. That's it.
Yeah, that's the way it should be. But yeah, that's a 1 hour. And then another thing that helps is looking at bigger time frames. Or you were right, because you said you're on the 5 minute. You're like, well, I didn't see it on the 5 minute. Then just don't pay attention. It's hard, but the trade that you showed, it never got near your stop.
Because I noticed that on the 30-minute on that day on Tuesday, the moving averages on the 30-minute, I mean, they were pretty tight.
Mhm.
So to me, I figure like, all right, it's gonna be a tight day. It's gonna be,
Mhm.
not nothing too crazy. But if the moving averages were further apart on the 30-minute, I mean, this is just me. I could be wrong. Who knows? If the moving averages on the 30-minute were apart, then I can see some moves happening.
Yeah.
But if they're pretty tight with each other, I feel like it's going to be some tight trades.
Yeah. And what you want to see is like, you want to see two time frames, at least two time frames lined up. So if the 1 minute's bearish and the 5 minute is bearish, then 15 minutes out of the 30-minute time frame might be bearish, even though the 30 minutes bullish, right?
Right.
So you know it's bearish. Okay, where can it go to? Start looking for those levels of where it can possibly go to. Whether it's dojis, whether it's support and demand zones, whether it's a moving average, your standard dev levels, or moving average, or fib levels. But pay attention to where price action. If there's nothing above or below price action, then go to a longer time frame. So like right here, if it were to break the 666 and the 200 down here, there's no moving averages below, so you can't use that. But you can use a 5 minute. Okay, the 200's below there. I can use that as a target. But take it in levels. You know what I'm saying? So
Yeah.
if it breaks the 100 fib, okay, it might go all the way to the 161 fib. Is there any moving averages between the 100 fib and the 161? Okay, yeah, there's a 200 fib. Okay, it can catch it there, but there might be a pullback up to the 100 because that's a shy of the 161 play, right? It shies the 161, comes back to the 100, which lines up with your moving average, and that's like strong resistance. So it's gonna pull back to that, and it's gonna continue going down to hit your 161 target.
Got it.
So I know I like that you're using multiple systems, but if those multiple systems stack up, like let's say your standard dev stacked up with the 666, that's either going to be strong support or strong resistance. And that goes the same with any of the other moving averages.
That was basically, my theory as I'm watching. That's why I kind of like, want to like try to feel out the standard deviation system.
Mhm.
Was because of that. If the standard deviation with the moving averages they lined up, to me that's like, all right, that's a really strong either resistance or support.
Yeah. If that's your grade A setup, then only trade that setup. Just like easy, he's only trading the 10-50 cross with the pullback to the 50 SMA, and then he enters. Define that play for you. Define that grade A setup. And only trade that grade A setup for a week and see, okay, it's fucking laser. I'm 100%. I'm 10 for 10. That's going to let you know. And it's going to give you the confidence because that's what you need. You need that confidence in your setup. And that's why I'm kind of recommending that you define your setup, create rules around your setup, because those rules are going to help you talk yourself through that trade. And those rules are not like, like definitive, like I want to see it hit.
Constitution.
No, like the rules are they're questions. They're not rules. They're like questions. Is price action at the 50 RSI? Yes. Is price action at a moving average or at standard dev? Yes or no, right? If it is, okay, what does TTM look like? It looks bearish or bullish. What does MACD look like? Bearish or bullish. Okay, and then you start stacking those catalysts. Okay, we got RSI that's bearish, TTM that's bearish, MACD that's bearish. Okay, what's price action look like? Is there lower highs? Okay, there is a lower high. Okay, where's that lower high off of? It's off of the standard plus one dev. Okay, where's VIX? VIX is at support. VIX can shoot up. Okay, perfect. I can get in short right here down to center standard dev because I got lower highs. I got MACD that's bearish. I got RSI that's bearish. I got TTM that's bearish. That's 4 because you got the VIX, right? VIX is at support or VIX is coming up to support. I see SPY or ES coming up to resistance. Okay, cool. They're in line. So let me look for a play. And then you just walk yourself through the trade. Just asking those rules are just questions. They're not really like how do I say it? Like, like
Definitive.
don't do that. Don't go running naked outside, right? It's like, man, should I go run naked outside?
Yeah.
You know what I'm saying? It's different. It's not like a law. It's not like, oh, no speeding past 55. It just says 55, speed limit 55, right? That's the law. Speed limit's 55. Can you go over 55? Yes, you can push it up by 5 miles an hour or 10 miles an hour and risk not getting a ticket. But these are more like questions, but they are rules because you want to see that setup. Whatever your setup is, like you want to see your standard dev stack with the moving average or a fib level. Okay, is it? Ask that question. Ask yourself that question. Is price action in the golden pocket? Okay, the golden pocket, is it lined up with the center of the standard dev? Or is there a daily level, a weekly level that stacks up with the fib or the standard standard dev? It does? Okay. Let me start looking at RSI is what I look at first, then MACD, and then TTM, and then volume. And if I see a big green bar pop up like this, oh shit, then that's my signal to start looking for something, either price action, and then RSI, and then MACD, and then TTM. But create that little system of when you see that first signal. And usually what I like to do is I like to look at that the RSI cross, like right here, got the RSI cross.
Yeah.
So, but price action is basing, right? So you're like, okay, I'm not going to get in here. I want to see a higher low off the 10 SMA. Okay. So we got the cross there. We got a bullish cross here. I got the RSI first. So I looked at price action, right? Okay. I'm not getting in there. I want to see a higher low off the 10 SMA. Okay. What does MACD look like? Okay. It looks like it's closing in. It looks like it might cross. Okay. We got the cross. What do I want to see next? A higher low off the 10, just like I said. You get the higher low right here off the 10. You get a higher low off the 10 right there. And now you're like, okay, everything is set. We got higher lows on our side. We got the MACD cross. We got TTM sellers stepping away. Volume doesn't look that great because there's red volume, right? But
Yeah.
everything else is lined up. Okay, this is my first leg entry long. So I'm getting in one tick above the body of that doji. I'd get in right here on this big green. And I'd go to the 50 SMA or 666 first. Those would be my targets. And well, actually on the 5 minute, the 200 would be first because you're going in steps. So you got your 10 SMA. The next is a 200. Okay, smash to the 200. What do I want to see? Smash to the 200,
The
possible
100.
pullback to the 200 for a push back up to the 666. And then you're like, okay, RSI looks bullish. Okay, it looks bullish. It can make it up to the 666. And MACD spreading apart with buyer oscillation coming in. You're like, okay, it's going to make it to 666. If you have one contract, close it out. If you have two contracts, close the one out at the 666. And then the second one, either let it ride or close it out at the 50. And like I said,
Next
you
next
might
Friday.
you might sound like you're fucking crazy if you're like your wife's around or your roommate or whoever you live with. You're like, who the fuck are you talking to? Like, I'm talking to myself through this trade. Well, shut the fuck up. Like, I got this, like, and you walk yourself through the trade, and that helped me calm my nerves when I started talking myself through the trade. I was like, oh, okay, I see why Brandon does this. It helps. Not
And
only
every
are
time
you
he
narrating,
does it, every
what's that?
time he does it, it is so smooth.
Yeah,
And I actually go through my trades very confident, very well. Not because of what he's
yeah.
saying, it's just, when he's walking through the ideas of what can happen, what
Yep.
should happen, it's like, all right,
Yeah.
it's reassuring, let's just say.
Yeah. So first thing you're gonna practice is walking yourself, like create some rules of what you like to see. So define your setup, create some rules around it, start walking yourself through those trades. And then like in a week or two, maybe a month, instead of just walking yourself through the trade, you're gonna remember how Brandon always he leaves us with 3 scenarios. He's like, scenario A, this is what we want to see, right? And then he has like
Yeah.
a worst case scenario, right? And then he has like another scenario that might happen. So you got 3 scenarios, and that'll come after you know how to walk yourself through the trade. But it works, dude. Put it to practice and let me know if it works. And
Will do.
you'll see how amazing it works and keeps you calm. But yes, try to add volume. Like on this, I mean, see how just I'm a little bit colorblind, and I just like how against a black background how it just pops.
Yeah,
And pay
yeah,
attention
I
to
mean,
the bar. If you see the bar like fucking growing really fast and you see it green, you're like, oh shit, it's strong. But if you see it like the volume bar going up slow and then the candle going up and down, you're like, fuck, this might not have enough strength. And you'll see volume beats once you start to pay attention to the volume. You're like, oh, now I know what a volume beat is. And you only want to try to do volume beats in consolidation zones. You don't want to do a
okay.
volume. You don't want to include this volume beat because that's the move, right?
Yeah.
You want to do consolidation zones right here. This whole thing. Is there any volume beats? There
No.
is. There was not really, because look at this big red bar. You exclude that, and you got one red volume beat right there, and one over here. But then right here, right before the move, you got a green volume beat right here. This
Right on
little,
that doji.
yeah, right on that doji. So what's that tell you? It's going to base. So you get that volume beat right there. Like I would get that volume beat. I got a doji. It looks like it's basing. Let me look at RSI. And then I just pay attention. Like I'm lasered in at RSI because it's still flat, right? Price action's still flat, but look at RSI. It's going higher lows. Higher lows, higher lows, higher lows. Okay. It pulls back to my 10 SMA. Still higher lows, higher lows. MACD's cross. Boom. Okay, I'm getting in right there. One tick above the pullback low. For a long, you want to get one tick above the body of the pullback low. So here's the low, right? Here's a little pullback, even though it's like in one candle,
Yeah.
the pullback. So it created that body. And this is what I like to, the cleaner the pullback, the easier the play will, the more likelihood the play will go in your favor. But when you get a pullback, like really choppy, like this pullback, how it's kind of like choppy. Usually I like to see like three bars right here, 3 red bars to the 50 and then up. Not saying that this can't work out because it's still a pullback. I just like to see it cleaner. Instead of like looping like this, I want to see it pull
Like a
back up.
like a zigzag.
Yeah. Yep.
Gotcha.
But yeah,
I
man,
got homework
practice.
to do. I got homework to do.
Yeah, practice, man, practice. Just screen time. You're at 3 year mark. I started, like just learning that much faster just because you've had that screen time, and you're just gonna pick it up faster. But bring your trades, man. I'll help you with your trades and help you with your strategy.
Thank you, Senpai.
Hey, no problem, man. Have a good weekend. See you
You
next
too,
week.
my man.
Everybody.
Bye.